Okay, just another disclaimer before this video. We're going to be talking about finances and money management and credit score and all this other good stuff that you guys like. And I just wanted to say that we're not professionals at all. So take everything we say with a grain of salt. We're just kind of giving you experience that we had and whatever knowledge that we've learned to help you, just kind of give you the general knowledge of subjects that are important to us, like opening a credit card early and opening up a savings and all that other good stuff that you're going to hear in the podcast. So just keep that in mind, that we're not professionals and we're telling you now. So don't put all your money into the stock market, and then if you lose it, it's not our fault. We're This is a disclaimer. Again, we're not professionals. Take everything we say with a grain of salt. And yeah, hopefully you abide by that um disclaimer. And yeah, I hope you enjoy the podcast. 5, 4, 3, 2, 1. Welcome back to the episode of the 5-3 podcast. I'm joined today with my co-host Nico.
Over here speaking.
Yeah, over here they can't see you. But yeah, anyways.
Here in the side of this pod.
Oh yeah. Fuck. Fucking tired, dude. It's like 12 o'clock here. But
Who gives a shit? We care about our audience.
yeah, I care about our audience. That's what I do. Hopefully it'll blow up. Change my banner too. Oh, but if you like my banner, I'm gonna upload new shit eventually soon. So that's why I changed my name and stuff.
Stay tuned.
So stay tuned to
Stay
my
tuned.
my KingGX YouTube channel. But moving on to the topic of today, we're gonna be talking about. We're gonna going back to our first episode, the investing in finances and all that. So we're gonna talk about personal financing, money management, what you should do if you're young at this age, or you can still do if you're an older age, but primarily if you're young, like just out of high school, 18 years old. We're gonna suggest some stuff that you should do that we've already done. So, yeah, we'll start with Nico about just general broad terms and like what we're gonna talk about with money management, because this is the topic that he wanted to talk about. So, well, this specific topic, money management, he wanted to talk about. So, go ahead and explain your side, I guess.
Yeah, all right. So I think we'll just cover just on the basis level of money management. I'll give the audience some rough estimates and numbers where they can think of. Uh, I think approximately 47 of Americans in the United States do not have an emergency fund of well over $500, or at least $500, and at least 57% of the Americans here in the United States are not invested into the stock market. So those two values are basically gives us an idea of how people are not knowledgeable or kind of ignorant in a way in terms of money management. And so, like how I said in the first podcast, it's a blessing to be in this day and age where we are allocated with enough resources and information in the website and in the internet in regards to savings, how to like manage your money, where do you spend on your money and whatnot. And so, and it's a dual sword too, because at our age too, as an 18-year-old, uh, it's not really given and provided for us, and it's one of those topics where you have to kind of dig deep and become more independent towards your self sustainability
Your
in terms of
financial, yeah, your
money.
financial
Yeah,
intelligence. You have to know, like, you have to make money work for you, not work for money. That's a quote from Rich Dad Poor Dad, I
yeah,
think. But yeah, it's a general topic of money management and personal finance. You have to, I just reiterate what he just said. You have to really know what money is and learn how you can make it, work for you, so you'll have different streams of income that'll come in so that can support you, rather than relying on one job that's, usually at this age, 18 usually doesn't last until you retire. So you want to have
for sure.
other forms that can come in, and that comes, just saving money in different accounts, investing. Not You can invest into other assets, not primarily the stock market, but stock market is a good place to invest in. And there's a bunch of other factors that you can do that'll help you in your financial career. in the future that'll get you ahead of your peers, especially if you're high school. Like if I wish I knew this stuff when I was a freshman and I was
Yeah,
interested.
man, that's
Oh my god, I would have so much. I probably wouldn't even end up going to college, honestly, because I'd have so much
yeah.
information. But
And plus too, like with that, it gives like us the benefit of knowing how to like money management even before we turn in like into a legal adult. And so just having that background gives us like a big boost into the future and what we expect in the real world.
yeah, it's something that I think everyone should know, especially at a young age,
Yeah.
because
I don't know,
you
man.
know,
I think the school should really consider in terms of like home economics, just in terms of like financing your money in general.
yeah, just general like taxes, mortgages, loans,
Yeah.
credit score, which is all stuff we'll get into.
So
So let's just get into the
yeah,
first topic. I think I'll start it. I'll do, um, I think I'll talk about credit score first.
credit
Yeah, just your credit in general.
definitely. Yeah.
Excuse me, yawning.
I
Okay,
opened
tired. Go ahead.
yeah, it's like 3 hours ahead from you guys, but
Yeah, 12
yeah.
a.m.
So luckily for me, I got approved. So I got my first credit card from Discover. They offered an incentive. It's a student based credit card that's like an incentive for college students where basically if you're trying to buy something or like for instance, I think one of the incentives are for this credit card specifically is that if you have like a 3.0 GPA and you maintain that within 1 year or one semester of your school year, you get an automatic $20 credit award to your
Credit.
account.
Oh, that's cool. Like free credit
Yeah,
you
it's
can
pretty.
use.
Yeah, it's pretty dope. And then within each billing cycle too, here's another incentive. Within each billing cycle, you're offered like a number of companies or businesses where if you buy them online or even on like through retail, you get cashback bonuses too.
Yeah,
So
that's a good.
yeah,
That's
so
a good way to go to.
yeah, so luckily I opened mines. I got approved not long ago. I think a couple of months ago. I never
Mm-hmm.
spent it though. That's the thing. I
Yeah, you're
always spend on my
supposed to
debit card.
spend it.
I was supposed to spend it, but
You're supposed
well
to
now
spend
I
it.
guess I treated myself because I've been working too. So
Yeah, which
I
should
treated
lead me.
myself.
Yeah, which should lead me to explaining how, as a young person, you should start in boosting your credit score so that when you have that time when you want to buy a house or take out a loan, car loan or stuff, you'll have
Yeah,
a high credit score, so you have a higher chance of getting the loan that you want and also getting lower interest fees on it when you got to pay it
for
off.
sure.
So the first step would, I'll make this very brief because I don't want to just, you can go in depth to this for like 20 minutes, but I won't. I'll try not to.
Yeah,
The first one is very straightforward. Is makes up 35% of your credit score is on-time payment history. So that just basically means just pay your shit on time and
yeah,
preferably in full because you don't want to. I mean, you can't do the minimum and you wouldn't get what's the word? You wouldn't get punished. But if you think about it, it's
yeah,
not really worth it to pay back. Just pay the minimum then, and then you have to keep
yeah, for sure.
paying off the last month's one, in addition with the next month's one. So it's not really worth it. So I just say
Yeah,
pay it up in full for each billing cycle, and then that'll take a good chunk of your credit score. But you don't want to miss, and you really don't want to miss any payments. So you gotta be very responsible. This is where it teaches you to be responsible with, especially money. So the
for
second,
sure.
yeah. So the second part would be credit utilization. Is basically so you're not using all the capital on your card or all the credit on your card. So it's usually at stay, I guess, in a 10 to 30% range of your maximum credit limit. So if you have, let's say, fuck, if I can do the math, was it $1,000? If you
Yeah,
spend $10 to $30 and pay it back in full, it's a good way to boost your credit score because it shows that you're one paying back the money on time, and that you're not using all the money in your accounts. So
definitely.
that's the second one of it, yeah. And the third step, oh, that makes about 30% of your credit score, by the way. So the third one is called the length of credit history, which is about 15%, which basically means that you have to have a long, like, history of credit. I think, like, if you want a good score, I think it's like 8 or 9 to 12 years that you need. So,
Yeah,
it's a very long process that you have to do. But, the sooner you start, like I said, but we are preaching,
the sooner the better.
the sooner the better. So by the time you're, what is that?
Like
Say
mid Mid
12, maybe you're,
20s,
yeah, mid
mid
20s, late 20s, and like early 30s, you'll
yeah,
have a
early
good
30s,
score
yeah.
in that section. So that's a way, yeah. Starting now is a way to build a foundation for that, so it's easy. Um, but yeah, so the fourth one, there's another like subsection to that, but I won't go into it. Go watch like a Graham Stephan video on credit score. He'll do it. He'll describe it more better than I am. But
Yeah.
the fourth step is the
Graham Stephan.
yeah,
That's the name.
Graham Stephan. I'll probably link him. But the fourth one is the total number of credit lines. So basically, if you have more open credit lines, it shows that it'll
You're
lower, yeah, it
responsible.
shows that you're responsible, and it shows that you're lower, it'll lower your overall credit utilization. So if you have like two cards that are 1,000 and you have um you spend $30 on each of them, so that's 60 out of 2,000, which I believe that the utilization will go down a little bit rather than having a straight 30% on one card. So it'll just lower it down and that'll boost your credit score too. So if you have more
Yeah.
open credit card lines, it'll help boost your score. And you just want to mix up the credit types too. Just have like
Yeah.
diversity in it so that it's better for you. And yeah, like you said, it shows that you have more on time payments. It's the lenders. It'll show that you're more responsible with money. And yeah, so don't close any old credit lines because there's really no point to it. Just leave it open and just keep paying it, I guess.
Actually, it will actually decrease your credit score if you close one of your credit card
Yeah,
line.
it will. So just leave it open.
Yeah.
There's
Just
really
leave
no
it
point.
open.
You could just spend like a
Yeah.
dollar like each month on it if you wanted to and just pay it back in full. It'll increase your score. And then
Yeah,
the
for
last one is
sure.
the number of credit inquiries, which is another 10% of your credit score. So it's basically when someone checks your credit score, it's called a hard inquiry, and it just shows how many times you know, you're going to, what's the word? How many times you're asking for credit basically. If you're asking for a loan or another credit card, it just shows lenders that, um, why did he go and try to find three lenders today? Why maybe he has like he's financially unstable, so that'll scare the lenders into not giving you a loan. But it's a really small amount, so you shouldn't really worry about that. And at like a younger age, it's not really gonna affect you because you're not gonna be taking out major loans. So, and I think it's like resets every like 2 years, I think, or something like that. So it's really nothing to worry about now. So, just you can open multiple credit cards. It wouldn't really affect you right now. So, yeah, those are
Yeah.
the 5 steps. Basically, I'm thinking about what 4 minutes I did. Um,
Uh,
so I mean, there's you could go look in articles. I just wanted to explain that the credit score I think is a very um underrated aspect of the financial, like especially if you're starting
for
young.
sure.
It's
Definitely.
very
Yeah.
underrated for young people because they don't think about that. They just think about making money and saving money. So, but
Yeah.
they don't think about you need to put a 20% down payment on your house. How are you gonna come up with the rest of the money? You gotta take a loan from the bank. For that, you need a good credit score. If you don't want high interest on
Mortgage
your
stuff,
mortgage,
whatnot.
yeah. So that's I think it's a very underrated thing, and people should pay more attention to it, so that you can get a higher score. I think the good scores is like seven. How was the good score? 700 something, yeah, to 800.
I think a baseline would be like 720, 710.
Yeah, 710. Yeah, I think 710 to like seven and up is like the best kind of score you can get. And like if you get
Yeah.
to 800, that's basically you win life basically.
Yeah,
But
it's like the
it's
perfect SAT
incredibly,
score.
yeah, it's incredibly
Yeah.
difficult to get though. But uh, you know, as long as you're in that threshold of like 710 to 800, it's fine. Lenders are able
Yeah.
to see that it's pretty good. So
As long as you have a 7 in your credit score, man,
yeah,
like that first number is a
yeah,
7, then
you're fine.
practically
You're good.
you're good.
But
Yeah.
yeah, like I said, it's very underrated. So if you're young listening to it, go open up a credit card with Discover or maybe even your local bank, just to put in a small amount, and yeah,
Yeah.
you can start increasing your money. You wouldn't have to spend that much too, especially if you have a job. It makes it way easier because then you can just balance
Oh,
out. You can
yeah.
just balance out funds, and you can get higher capital too, which will, um, I think it'll help you increase your score in like credit utilization and stuff, something like that.
Yeah.
Go watch that video. I'll probably link it if anything. But yeah, that's my
Yeah,
take
just
on yeah.
link the things that you said on the description
Yeah, that was
so
all from the Grand Stefan
our
video.
audience can
So
know. Yeah.
yeah, we'll see.
No, for sure. Whatever Noah says, like just to kind of like grasp on it, it's really beneficial towards you, And I think a lot of people come to this is that they're kind of scared of what their first credit score would be, and don't be afraid of what it, to be honest,
You're
because
cutting out.
a lot of the people who are starting their credit score or their credit line usually often start with like a 500, 600 as their basis rate.
Mm-hmm.
So, as a first impression, people might say or might assume like, oh man, this is a bad credit score. Like, gosh, what? How the hell did I start with this? But to be honest, like in reality, like it's the matter of like time and like how you build it off based on your credit utilization, like how Noah said.
Mm-hmm. You have to be
So
very patient with it, and
yeah, you have to be very patient. It takes a like quite a long time just to have like some substantial history with your credit history with your credit line. So
yeah, so you have to,
um
yeah, you just gotta be patient. It's a real waiting
yeah,
game if you want a high score.
like
So
for me, when I first opened my Discover credit card,
your score
I
went down, yeah.
didn't. Yeah, not really. So actually, there was a problem in terms of my account. So I I did all the application stuff, whatnot. I could link. No, I could probably link the um
Oh yeah,
Discover
Discover
credit line.
application, yeah.
Yeah, application for student. Um, yeah. So when I first opened this application, I did all the process and whatnot. And so at the end, they were asking some sort of I guess security or whatnot, or like in terms of our FICO credit score. FICO credit score is basically a built-in credit score for Discover. I think it's also a general gauge for a lot of the credit lines here that's available to you. And so I think they were asking me that at near the end of my application. I think I applied for it, but after a couple of days, I got a reply back, and they said that they're not gonna open it until I have some credit history within my. So I told them why and when can I access that, and they said it'll give me roughly like around 7 to 8 months, approximately. So within that span, I'm like right now I'm using my credit card a little bit more and trying to build more history to it, um and yeah, with history too, like you don't really have to buy um the things that you need like based on your 10 to 30% credit limitation.
Mm-hmm.
So usually with your limitation, it's based off your income. So
Yeah.
if you're working or not, it depends based on the category you select during your application. So like for me, I'm a part-time worker right now. So obviously my first category would be the first option above would be between 0 to what $25,000 a year you make for the income.
And then the
And
cap,
so
what is the max on that card? Like five, six
oh yeah,
hundred
so
around?
that one is yeah, so that one yeah, so that's the first option, right? And then the second option comes into play with your IRS. So you plug in your SN information and your stats, and then from that they do like a I guess like a rerun through your application and to your service. And then after
Mm-hmm.
that, I think they come back to you with your yeah, like how like Noah said, your credit limitation. So for me, luckily, with my job, I got offered with a limitation of $1,500.
Pretty good,
And
man.
so it's pretty good because obviously for me I'm lucky to have a good paying job as a 18-year-old, and so with that advantage I got a good I guess you could say it's a good limitation for your credit score or credit line. So yeah, so within that basis I just kind of rough estimate how much I'm gonna gauge my payment. So yeah, like how Noah said, 10 to 30%. So roughly, I'm kind of buying things here and there for like $200 to $400. I think I would
Yeah,
say,
that's
and
about right.
I think, and I like for in all honesty, you don't really have to be at that maximum.
Yeah,
Like you
you
can
don't have
just
to
buy a pack
spend.
of gum.
You could just buy a pack of gun every month and just
Yeah, buy a
pay it
pack of
off.
gum. Like whatever, like just like simple necessities that you need, like some tissue
Yeah, maybe
paper,
like some little bit of groceries or something. Maybe a
groceries. Yeah,
meal.
groceries here
You
and
know,
there. Yeah.
doesn't have to be
And what's cool
crazy.
about
I don't know what Nico's
yeah, it doesn't
spending
really
his
have
money on, but you know,
I am treating myself for once,
treats,
obviously.
buying
Ever since I
some new
started working.
clothes.
Hey man, I've been saving, I've been like fucking investing on this M1 like trading dividend stuff.
Yeah, how much do you put in there? 100, yeah.
I put $100 right now, so it's pretty good.
But they're gonna
Yeah, I got like
you're gonna reinvest that into more dividends,
yeah, it's like a snowball
more
effect.
shares of
We'll
dividends. Yeah,
yeah, we'll talk about that
we'll
later
get
on
into
to
that.
this
Yeah, but we're gonna have
podcast.
to move on
Yeah,
from this topic a little bit. But
yeah. So,
yeah, just to wrap it
but yeah,
up.
so
Yeah, just get a credit
yeah,
card.
yeah. Just get a credit card. It's simple. It's way easier. Right now I have the Discover app right now, so you can do the application based, so like really on your phone, and
Yeah,
it takes like
do
no
it right
longer.
after this video. Do it right after this video.
It takes no longer than 10 minutes. Nah, I'm just kidding. That's probably exaggerating,
No,
but like
no.
it won't
Probably
take that
take about
long.
15, maybe 10, 15 minutes is the max. But
Yeah, it won't take that long. You just put in your credentials,
yeah,
basic information. You link your obviously you link your debit
right.
account or
Yeah,
your checking account, and
yeah.
then from there you just start it on.
Yeah,
And
and
yeah,
then you just start it. Just do what I told you. All right. So yeah, simple. We're gonna move on from this topic because it's been a little while. So trying to manage time. There's a lot of stuff we want to go over. So what's the next thing you want to go over? Because I just want to like go on and off. Just different topics. So I'm not talking the whole time.
so we talked about money management. We talked about our credit line, credit history, and the utilization of our credit score. I guess we could talk about just simple savings, man. Like for our age too. Like what is like
Just in
I guess the
general.
question
Yeah.
I guess the question that people would ask at our age, like how do you start off getting money? Because
Yeah,
like a lot of
that's a good
people,
one. Yeah.
yeah, yeah. So I think you could start on your topic. So no, what else? What are your thoughts on that aspect?
Um, on the aspects of saving money, I would say at age right now, I realized quick that it's really difficult. Let me start with this. It's really difficult to not buy stuff you want because we
Yeah,
live in such a consumer industry now, or consumer world, or society, that everything's just pushed around you to buy stuff, and you have impulses. I have impulses all the time, but I have to restrain myself. Like I'll be going through
yeah.
Instagram and looking at clothing and shoes, and like I want that, but I remember like
For real,
I'm in
dude,
school. I
man.
need to be
Those
saving my
promotions.
money. Yeah. So you just gotta
Yeah,
control your wants and needs, especially if you're a teenager. You're living with your parents still. You don't really need to have buy needs. You just kind of gotta manage your wants if you really want to save money. So like all that
for
birthday
sure.
money you get, all that whatever other money you get from your job, maybe just save it. Buy stuff you really only need. Like maybe if you're um you know, an emergency or something and you gotta buy something or whatever, or you run out of gas, and that's understandable. But don't go spending your stuff on like a Gucci belt or off-white hoodie all that shit, because it's really not going to help you in the long term.
For sure, definitely.
Kind of
And
hypocritical
don't
because
be
I
a.
just did buy a off-white hoodie, but it's okay.
It's okay. It's okay to contradict that
It's okay. That was my
for
last
joke
impulse
for
buy.
jokes.
Yeah.
Just for a joke.
Just yeah, that was
Just for a joke.
jokey. I don't have an off-white hoodie. I do have an
Yeah.
off-white hoodie.
Yeah. So whatever Noah says, it's completely true. And honestly, to me, like in my preference too, like don't be afraid of sacrificing things for your own good. Like,
Mhm.
if you need to buy like a bundle of clothes, like a shirt that's like $8 to $10, go, dude,
Yeah,
go for it.
you should do
No
that.
one's gonna judge you, and if there comes a time when people judge you based on how you look and how your outcome is,
It
in
doesn't. It's not gonna
socioeconomic
affect.
factors,
Yeah.
it's not gonna affect you, and it's more likely gonna affect them because in the long run, you're gonna be more successful off
Yeah.
more by yourself than them.
I
So
know. Yeah.
whatever they're
Yeah.
brushing off now from you is just completely nonsense to you, and just focus on narrowing down your past, and just building up your credentials and
Yeah,
so.
just saving your money. And like the stigma around like high school and stuff, especially, is you're really self-conscious around people
Yeah,
about the
for
stuff
sure,
you
definitely.
wear. And like for me, that was kind of true, but towards the end I kind of really didn't
That's
care.
true for me, man.
Yeah,
Yeah,
I didn't really care. I kind of like earlier I kind of like followed the trends, like we had the pro clubs and stuff we were talking about yesterday,
yeah.
and follow the
I
trends
mean,
that everyone's
obviously,
doing, because
obviously, you
you
have to
want
be
it to be
like,
the status quo. You have to be
of
like
course,
everyone
yeah.
else. But
Follow the status quo,
yeah,
obviously.
but eventually after like
And
junior senior year, I realized like fuck, dude, I don't care anymore. I mean, you can
yeah,
still like dressing. You can still dress. You still want to dress kind of
yeah,
nice.
yeah. Obviously, you have to dress, pretty nice.
Yeah,
Like actually, be socially responsible in how you look
yeah,
and present
nice and
yourself.
appropriate and stuff. But
Yeah, and then
it
basic
doesn't have
hygiene
like
stuff.
yeah, like all the other stuff, like what kind of clothes you have. Like if you have like Supreme or whatever, if you have, you
Yeah,
need these.
that's yeah.
You need PacSun jeans. You need a pair of Vans. Yeah, that doesn't matter honestly.
No.
Like as soon as you reach college, if you go to college, you'll realize that it's so free. Like no one cares about what you do, and that's my mindset
Yeah,
right
for
now.
sure.
I don't care what anybody thinks about me. Like, dude, I went out today with my hair. I didn't even make my hair. I had my bed head the whole day. I didn't give a shit.
Yeah.
If I went to
So
high school like that, I would have fucking cared. I would have put a hat on or something. But
yeah,
yeah,
that's what kind of like to kind of tie into that too. Like that's what kind of high school brings us. That kind of impedes our way of thinking, managing our money expenses wisely. Is that we're pressured to look and act a certain way, like quote unquote status quo. That
uh-huh.
like even if we go to a certain direction where it's beneficial for us financially, like it's gonna affect the whole group. That's what kind of like kind of pisses me off too. Like even though I want to wear a certain like clothing or certain or go through a way like a phase where I just want to save up my money and I don't want to buy things that are that are unnecessary. People are
Yeah.
gonna judge and go off from that and be like, man, what the fuck? You're not gonna join our group? Oh, you're not part of the bandwagon? Oh shit, this and that. Like, come on, dude. Like, it's completely fucking
It,
immature of yourself, and you have no sense of you're not thinking and you're not understanding the situation. Like, you're not letting the people talk to you and give you their own basis in terms of their own side of the story. And so you really have to like be socially aware of what people might be in their situation in terms of financially and too. So yeah.
yeah, I agree with that. Just just save your money if it. You don't have to have the status quo. The status quo is dumb. I mean,
Status quo is just completely false.
yeah, it's false. You don't need it.
Yeah.
It's stupid. Waste of time. So just focus on yourself. Focus, on saving. If you have to sacrifice some clothing, like,
Yeah.
everyone's wearing these new Nikes or whatever. I sound like such a fucking boomer, but, if everyone's had this some kind of shoe or clothing, just kind of steer away from it, especially if it's really pricey. Just steer away of it. You
Yeah, for
don't need
sure.
it. It's just have your own style. But it's
For
not,
sure.
that's not a big factor, but it's just a fact of, just focusing on yourself, focusing on your financial goals and whatever, especially if you're in high school. Don't let other people stigmatize you. Don't even let your parents do that. Honestly, I mean,
Yeah.
you should still take some advice from your parents because they have a little more experience in money, but they might not be doing the stuff like opening a Roth IRA or like when they're 18, getting multiple credit cards and using them to build up your credit score. Like they don't may not have
Yeah.
that, but they have the other financial skills that you should take account of. But even if your parents stigmatize you or like what's the word go against you on those ideas of trying to benefit your financial future, just just
Yeah.
just know that it's you're doing yourself good. You don't have to really um don't take it too serious, especially from them. Because my dad told me that, like, with the Roth IRA, we'll go over later, is to, like, don't focus on that now. You don't need to open one. Like,
Yeah.
his reaction is really surreal to me because it was like he's kind of angry almost, but he's always kind of like
Mm.
that. But he just
Yo,
kind of
tell me
seemed
about it,
angry.
man.
Yeah. So and he's like, no, you
Dude,
should
tell me,
focus on school. You don't need that. That was just a teacher who was telling you. And I'm like,
dude.
it's
That's
it's a
funny.
finance
Yeah.
it's a smart financial move to do, and it's reward greatly outweighs the risk. There's no risk to that,
Oh,
honestly.
oh, oh, for sure, for sure.
Yeah.
Especially if we have knowledge and like beforehand, and like you know what to expect. It just gives you like a third tool, and like a third basic
Yeah, it
expertise.
does. So you just want to have, just have the knowledge, build your knowledge up. All I'm trying to say. Just build your knowledge
Yeah.
around financial stuff. Go read books about it.
Yo,
Try
dead
to go
ass.
places.
I legit have this same situation. Like when I was opening up my Discover card, like my parents were like, "You don't fucking need a credit card at your age. Come on, man. You're
Yeah. See.
18. Just focus on your school.
Yeah.
We'll take care of your finances. Here you go. We'll give you some sort of like college allowance so you could
Yeah,
and then
but
you could base it off
it's
from
not their
there."
fault. It's just because they grew up in a different time and they have a different
Yeah,
mindset
yeah, they
about
get yeah,
finances.
and
Yeah.
then yeah, I don't blame them because our generation is obviously different from theirs,
Yeah.
and like
Every generation
whatever
is
they're getting
different.
passed, yeah, whatever they're getting passed on from their previous generation, is not gonna work for them.
Yeah.
So,
Yeah. It's not really
um,
gonna work for it. We have to do.
yeah,
We have to be our parents, but better. We have to do better than our parents. But if you don't have good
and I,
financial sustainability, it's
yeah,
not
for
gonna
sure,
work. Yeah.
it's not, it has to work one way or the other.
Yeah. So.
And what kind of yearns the question for others is the fact like, oh, I'm so bothered. Like, fuck, man. Like, I really want to buy this shit. I've been sacrificing a lot of shit. Like, if it's really important to you and it holds kind of special place in your, and you think that you've made all your sacrifices where you at,
Cutting out.
why not? Um, like I was talking about, yeah, like how I said, right? If there people, you're in the question of saying like, okay, I've sacrificed too much, I want to at least treat myself to a thing or to a, I guess, like a gift. Um, yeah, if all things go for sure, like if it, especially if you sacrifice a lot and you've known that you've done things for yourself beneficially and it's advantageous to your finances, like why not, like go buy some things, but just make sure that it holds an accountability of how you sacrificed it. So like, for instance, right, if you sacrifice a little bit of your money based on your things, then on the next interval, you want to like be more sacrificial and be more I guess
Yeah.
staying minimalistic and like going off buying things that you need and just for survivability. But
Mm-hmm.
if you do that for like maybe like for 2 or 3 times, like you're actually on it, you've been buying things that you actually need and you don't have like special incentives or like gifts, what you want, then yeah, go for sure. Like on your third or fourth time sacrificing, like go treat yourself to something.
Yeah.
Because I think once in a while, a lot of people should always come
Oh
back
yeah, you should
into.
always treat yourself to something once in a while. Whether
Yeah,
it's like a nice meal or whether it's like a new shoe or something. It's always nice to do that once in a while. For me, I think it's like big purchases like that. I think it's maybe like every year or so. I usually do something like that.
yeah, for sure,
I do a
definitely.
big buy
And it's
just to
self
treat myself.
gratifying too.
Yeah, it helps you to
Yeah,
like it'll motivate you to do more because you want more of it. So it'll motivate you to
yeah,
go look out at more investing options, go look at more
yeah,
saving options and stuff like that. So increase your wealth, and then you'll have a lot more capital to use to buy those luxuries that you want, because everybody wants some kind of luxury. Not gonna like, you
yeah,
can't deny that
yeah.
everybody does, even the most
Every,
minimal people do.
they want something that's out of their reach.
Yeah,
And I
they
guess
do.
another question that people might ask is like, okay, so we asked about how we made some sort of sacrifice. You also asked about how to save money. Where can we start? And in honesty, just start off using 10% of what you have right now.
Yeah.
So like you're like if you collected like for you like one of the honesties to you right now. So if you collected like what your birthday money, you got some sort of allowance from your parents, like you got like work from your yard or something, like you got some money from your job. Try to use the, I guess, like the general I wouldn't say arbitrary number. I guess I would say it's like an abstract number where it's just there, but
Mm-hmm.
just use like the 10% rule, like
Yeah. Just use ten
um
percent of your money and put the rest in savings.
yeah, like put the rest in terms
Yeah,
of
and then use
sacrificing
that. Yeah,
and what
and
you
then
need.
use that 10% just for needs.
Yeah, for
That's
sure.
like that is the
Yeah,
ultimate business model or like finance model. Just spend less. What is it? Fucking spend less than you need. I think is the thing.
yeah.
Spend less than your means. Yeah. So if you
And
yeah.
if you're consistent on that, yeah, like how like what I was saying, like just spend whatever you need, but not what you want,
Mm-hmm.
and you're consistent on that motto and whatever line you're doing for your finances, like it'll pay off for sure.
Yeah. Like especially with buying stuff, if you have impulses, just give it like a week or so and just rethink about it. Like, is this gonna help me? Like the question you should
Oh
ask
yeah,
is like, is this gonna benefit me in the future? Like in the
yeah,
near future or even long term future at all? If it's yes, then maybe you should consider it a little bit more. But if it's like no, then just don't buy it. You don't need it. It'll always be there for you to buy. Just you don't need it now.
oh yeah.
Yeah. So just
Here,
control those impulses.
people can also if you guys want to try to like simulate it, try going to like a random like grocery store or like Walmart or something, right? And bring like whatever you have and cut that down, like whatever amount you have, to 10%. And within that 10%, you can only spend the things that you need, and whatever the rest you have to keep to yourself and you can't spend.
Yeah.
And try to see what you can find. And
It's
if
a
it does
lot
work for
harder than
you,
you think.
yeah, it's a lot harder than you think. Yeah, it's a challenge. But if you know what you're gonna do and you know how to spend it wisely, then that's a great way to start.
Yeah, that's a great way to start for
Yeah,
most people. So I think
yeah.
that's a good section of money management we did talk about for
And
like
that
10 minutes.
knows how much bad or how much good you are in terms of budgeting your money too.
Mm-hmm.
Because a lot of people, I don't think they're gonna, I don't think they're gonna sacrifice or be on 10% and surviving on that. I think they're gonna spend the rest of the 90% in their other pocket. I'm like, fuck, man.
Yeah.
I want this candy, but there's a new Modern Warfare game that came out, so right?
Yeah.
Yeah. So you just gotta think, and it'll eventually come out. If your true
Yeah.
colors will come out
It'll come out
eventually.
of it'll come off as natural as uh come out of second nature to what's it called? To just spend less than you need. So it's just a good skill to start now. But yeah, I think we're gonna move on to the next topic. I think we're talking about like
Oh
beginner
yeah.
investing,
Oh yeah,
like
for
different
sure.
platforms and like like different ways to invest. Um, and then we'll probably talk about like what's it called? Like higher interest savings and stuff like that. Different whatever.
Oh yeah.
So let's start with like beginner investing stuff. I'd say look into like the stock market. Honestly, look into investing in the stock market. 'Cause
Oh, for
that is
sure.
probably the easiest way. You just have to learn. You have to be willing to learn. It's not a get rich quick scheme. There's no get rich
Yeah.
quick scheme. Like unless you win like a
Yeah.
lawsuit maybe or you win the lottery, but other than that, you have to
You
learn
have
how
to
to
work
go
your
into
ass
stock. You have
off.
to work your ass off to get, higher and higher in the
Yeah.
ranks. And it's a slow process. It's frustrating too.
There's no easy way out. There's always a hard.
You have to learn. So like yeah, I'd say for not forex I'd say look into stock trading in the beginning. Just try to see how it works, understand the market movements, understand how it works, and put small amounts of money to buy certain shares or whatever. Just a general term of oh shit, the general
Yeah.
my voice cracked. Just a general term of investing, and then you can look at other platforms. I think the best is look for platforms that offer like fractional shares, like M1 Finance or Charles Schwab, or all those other. Does Robinhood have fractional shares yet? I don't think it has it yet.
No, I don't think so.
I think I think it's gonna be
It's
soon.
just straight.
I think it's gonna be
It's
soon
I'm pretty sure it's soon,
because they have to
but
compete with Charles Schwab and all that, and TD Ameritrade. Wait, TD Ameritrade doesn't have that. I think Schwab only has it and M1.
Yeah, Schwab and
Yeah, so like places like Schwab and M1, you can even go look at like Webull and like Robinhood and on those ones, but you just have to pay full price for this stock. But like with those fractional ones, um you're able to purchase like small fractions. If you have $100, you're able to invest in like maybe four or five, even more different companies because you only can buy a certain amount, which is pretty good. You'll have a lot of diversity, and then eventually with that, you can put more capital into those stocks you already have, or even just buy more and continue to put money and just grow your income or grow your assets, and that's a good way to start. But yeah, I think stock market is a good place to start for most people because it's so accessible these days. It's like on your phone like every day, and I think it's a little easier to. It's easy to learn. It's quickly to learn. Yeah.
yeah, for sure.
Yeah.
Um,
More specifically,
and
I would
it's
say.
pretty.
Oh, so go ahead. Sorry.
Sorry, specific.
Huh?
Or what are this? Yeah, what are the specifics, Noah?
I don't know. I forgot what I was gonna say. Go.
Oh shit. But yeah. Yeah. Just get a head start and get an insight of what stock market is, because like how I said in the beginning of this podcast, only like what roughly like half of the population of the states only know, or not even know, at least know what stock market is. Know
Yeah.
even what stock market.
And a small amount of
Yeah,
those
that's
people that like actually invest in the stock market.
yeah, and then within that narrowed down percentage, like not all of them actually invest in stock.
Cutting out again.
Like within that narrowed percentage, like not a lot of people are actually invested into the stock market.
Yeah.
Yeah,
Yeah.
so
So it's good to just start off now, because I think that's probably one of the easier ways. I mean, you can do like you can start your own business. You can, invest in stuff that are long term like bonds or whatever. But I think for people with like lower incomes, I think stocks is a good way to start. Or you can even do
for
like more
sure. Yeah.
unorthodox. You could do stuff like sneakers. You could buy shoes at retail and sell them for resale. That's basically what
Yeah.
like stocks is. You sell it low. I mean, you buy it low and you sell it high. So that's a basic
You can go on
business
like
concept.
you can even sell some of your things, like do like a on online garage sale.
Yeah, you could do garage sales.
Like
Yeah,
how I said, like if you whatever you have that is your want previously and you don't necessarily need it already, you could sell it off and people can profit off of it.
yeah, you can profit off of that,
Yeah.
and there's so many ways you can invest. So you just gotta find it. For me
Yeah.
personally, I didn't really get into like the day trading in the stock market because I think it was a little difficult and you need a lot more
It was
capital.
not until like later, right?
Yeah, I'm still. I mean, I still want to get a stock market into dividends, and dividends is for you don't know. It's basically companies that pay you money for holding their stock or for buying their stock. They'll pay you a certain
Yeah.
percentage, like every month or so, or every few months, every quarter, I think, or every month.
Yeah, every quarter. Every
Yeah,
quarter.
if you can
It
find,
depends
yeah, if you can
on
find,
different,
yeah,
yeah.
depends on the company, but they'll pay you a certain amount, and if the more capital you have in there, the greater your return is on that. So like if you have a $2,000 investment in let's say what is Coca-Cola's return, like 2%,
Probably.
like 2%, let's
Yeah,
just say let's just
I
say
gotta
2%. Let's say you have $2,000 in stock share from Coca-Cola and they pay you back 2% monthly. That's basically $20 for, yeah, every month, basically just for buying their stock. You think about it, is it $20 or $2?
The how much the price is
How
for
much is
the Coca-Cola
2%?
share?
No, just in general, I guess if you have $2,000 and their
Um,
dividend is uh
well, right now, just off of yesterday, it's d- it was down. So yeah, like it's roughly 2%. Right now it's like at 1.5 right now.
Well, I'm just gonna
So
say like
it's
two.
yeah,
Two.
it's
I
like
think two is
2%. Yeah,
easier.
it's like 2%. Yeah.
So that's
But
actually sorry, $40. I think
mm-hmm.
it's forty
50,
dollars.
50
Oh,
right now.
$50. Okay,
50 right
50.
now.
Let's just say 50. So they basically, if you have $2,000 in Coca-Cola shares and they pay you back every quarter, I think it's every like 2 or 3 months, you're basically getting
Yeah.
$40 back. $40
Yeah.
back just for holding that. And if you wait,
Yeah.
eventually, once you reach that threshold of what you spend in there, it basically becomes straight profits. So once you reach that 2000
Mm-hmm.
mark of
Yeah.
dividends, that's called passive income. That's basically when you're making money in your sleep. And
Yeah.
then if you build a higher,
Not knowing that you're making income that's like out of your hand.
yeah, it's basically the companies are paying you for that. And once you reach like
Yeah.
that, once you break even at 2000 and it goes over that, that's all um, passive income. And then you eventually,
Yeah.
you reinvest that back into dividends and it grows your capital, so you get a greater return. And that's how basically like stock people will get rich, is because like dividends
Yeah.
especially, they'll just keep pouring their dividends back into the shares so they can buy more, and their dividends increase and they have more money. So just looking at the stock market, I think dividend is a lot better than day trading, but for
People
yeah.
call the term as a snowball effect.
Yeah, that's what it
Um,
is, snowball effect.
yeah. So whatever, like how Noah said, whatever income you get based on your profit off of your shares,
Mhm.
like how Coca-Cola, right? So like that's like $50 share. You have $2,000, like $40 for
Yeah.
every time. And for
For
every quarter, they get an increase in
Yeah, they can
or
increase it.
monthly,
Cutting out again.
and boom, like your monthly earnings, and then boom, you get your passive
Yeah,
income
it's
right
basically passive income
right in
after
front of
that,
your,
and
yeah,
you just keep investing and you just make more money. Yeah, but for me personally, I think I'm gonna go with like for day trading is the forex market, foreign exchange.
yeah.
Like once you learn how to do all of that, it's pretty addicting, and you can learn how the market works on the
It's like a
charts.
game almost.
It's gambling basically. It's speculation, yeah, and you just have to.
Gambling legally.
It's
You could say
legally
that.
gambling, yeah. It's just putting your money in and
Yeah,
seeing it, but
you're gambling it legally.
most of the time, forex is a lot safer than what's it called, the stock market, because it's not as you're depending on the movements of like entire countries' currencies, so it's not as volatile as like saying a Tesla stock.
You wanna give the audience like a brief overview of what like forex is, like what are the components that come into play,
Okay, so
and what are
basically
the topics.
forex is you're competing against, you're putting two currencies against each other. So let's just say the US dollar and the euro is a main forex pair, a major forex pair. So you're basically in that scenario, um you're basically betting that fuck, what is it? If the price goes up, it usually means that the euro is getting stronger and the US dollar is getting weaker. If the price goes down, that means the US dollar is getting stronger. I'm pretty sure that's how it works. But yeah, because the euro value goes down or something like that. It might be the opposite, but you're basically pinning two pairs against each other, and then you're just looking at the market and see how it works. It's a candlestick chart usually, and you just see how the price fluctuate. You're all basing this on price. So you want to enter at a certain place, and then you take your profit at a certain price point. All right, it's
For
a little
sure.
it's a little hard to explain really, but it's a lot bigger market than the stock market. I think it's like the volume in the forex market is like $5.4 trillion compared to the New York Stock Exchange. I think it's like a what was it, like 30 billion in
30
volume
billion.
per
Yeah,
day.
30
Yeah,
billion.
but it's $5 trillion. So you have a lot of opportunities to where you're able. It's not as volatile too. You
Yeah.
have a lot of opportunities to enter the trade and take the trade and risk not losing a lot of money. So
What
that's
are some websites that you use for Forex? Like, do you want to
I
give the
actually
audience like
I actually
some
I
resources?
actually bought a course. I had to buy a course online, but you don't have to buy those expensive courses because there's a lot of scammy courses out there. I say
Yeah.
there's a good website called babypips.com, I think, where it basically takes you to like articles or like sections of forex and what the basics are and how to do technical analysis. And there's also videos online of traders that do it. This guy I follow, I think
True.
Trader Nick or something. He does like analysis every morning, like a live stream analysis, so you can watch that. And he has a lot of videos, and you can also just find a lot of forex traders online that have, you know, different strategies for risk management, for technical analysis. So there's so many resources. You just gotta find it, man.
So
There's so many resources.
you have it with the click of a button, basically.
Yeah, yeah. Basically, so
So
that's basically what forex is in a nutshell. You're just basically you're buying one pair, and then you sell it or buy it, to get the money back, and you profit off that. Basically, I'm terrible at explaining. So just in general, you're just
no,
trading.
that's a good thing.
Yeah,
You don't really have
you're
to
just
go in depth,
trading.
but at least just give like a general insight. Yeah.
Yeah, it's basically like if you have a dollar and you go to Japan, or like you have a few $100s, you go to Japan, exchange that, and then you wait for the market to go up or down, and you exchange it back. You'll basically get your money like you either get less money, or you'll get more money. That's basically what it is.
Mm,
You're just
for sure.
betting that the market goes up or down, but it's a lot of other variables that you got to learn to in order to be, um, just understand the market. I'm not really good. I haven't traded.
Be
Yeah,
competent in the market.
yeah, to be confident. Yeah, competent and confident so that you know what you're doing. Like for me personally, I haven't traded in the market yet. I really want to, but I'm still going through the course and trying to
Are you paper trading by any chance in Forex?
not really, but I know how to do
Oh yeah, so, sorry audience, but paper trading is basically
it's
like a
fake money. Yeah,
simulation.
it's just
It's
uh,
fake money.
it's just numbers on a screen that shows you what money you have, but it's not real money.
Yeah.
Yeah, so just kind of help you practice, but no, I haven't been doing that yet, but I have been just practicing my technical analysis, which is what you use to, like with charts and lines you usually
Oh yeah,
see.
for sure.
Yeah,
Yeah,
just
yeah.
to predict where you want to enter the trade and where you want to get out and where you want to take your profit. And
So what is your next steps in terms of Forex? Are you gonna try to implement paper trading or stuff, or are you gonna try to
yeah, I'm gonna
invest in your
eventually.
capital or something? What
I'm
is your
probably gonna
yeah.
start paper trading maybe like in a few weeks or so once I finish with the course, because they have like a demo trading plan which I have, which is basically what paper trading is on this. This forex platform is basically just trading fake money. I think I have a starting capital of like 5,000 or something, so you're gonna play around with that and see how it works. But I know it's not gonna be the same as when you enter the market for real because it's just a whole different monster. You just have that mindset of like, oh, I'm gonna lose, and what if I lose this? I
Yeah,
lose all my money and whatnot. But yeah, so
that's true.
for me, I'm gonna start maybe in a few weeks. Just try to reinforce my knowledge of technical analysis and really kind of not master, just kind of get it used to it, and then I'll do the paper trading, and then eventually I'll get into the market maybe by like a couple months or so, and hopefully I'll start making some paper, man, some real paper. That'd be
Getting
cool.
some moolah.
Yeah,
Yeah.
I think it's a lot
But
easier
yeah, I
than
think
stock
yeah,
market because it's not really news based and shit. It just depends on
it's more
price.
the currency. Well, it kind of depends if there's some
Oh
news in
no, yeah,
terms of
yeah,
like the
it does.
currency.
It does,
Yeah, yeah,
yeah. But
there's
it's
some
not
yeah.
really. It's just mainly like the hedge funds and banks trading money, across the
That's true.
world. That's what really moves the markets because they trade in so much volume. So
Yeah,
it's just mainly the change of price.
for
But
sure.
yeah, that's
Definitely.
basically my way. I don't know if you have any other investing, like
Like
beginner
yeah,
investing.
like how I said in the beginning, right? There's tons of apps that are available. Well, not ton. I guess there like a handful of apps that are really good for you.
Mm-hmm.
Noah kind of mentioned it briefly during the podcast. So what I have right now, I kind of set up with my own financial applications here on my phone. So I have M1 Finance, which is a brokerage account. I have Webull, and I have Robinhood. So those three are pretty good right now. Robinhood, I don't really have any like big of it. I've been more focusing on Webull and M1 Finance. M1 Finance, like how Noah said, it's a portfolio based on fractional shares. So what's the good thing about this is that instead of buying a whole share, which usually people do in stock trading, this when they buy a share like a whole price, M1 allows you to basically purchase the share within a fraction portion of it. So you don't have to buy the whole thing. You can just buy within like your
Yeah, so
own
you could
threshold
you
of
could
your
buy like
money.
a $2,000 share of Amazon for like $5 if you wanted to.
Yeah. And then and Webull is I think a little more in the opposite kind where it's more like
Full.
the actual shares that you're actually paying for,
You gotta buy the full
but
share.
it's but it's more I guess it's more feasible in terms of grasping the idea and the concepts based on the dividends and the portfolio and the stock trading and the market. And
Yeah.
what's a great thing about these tools is that recently they've I think three is it three no or four of these brokerage accounts all became commission
Oh
free.
yeah, yeah. There's a lot of them are
Yeah,
commission free now, basically, because
yeah,
they're
because
I don't know
yeah,
why, but they're just all commission free now.
I forgot what the news is about for what happened, but
Yeah, but they're all
yeah,
free now.
basically all three or all four of the applications it's Webull, M1, TD Ameritrade, and I think Charles Schwab is too.
Yeah.
Yeah. So I think four. I think there's probably a couple more, but yeah, those four are commission free now. So basically, whenever you get return, from your threshold and your from your income, you won't get deducted. So thankfully, whatever you're getting earned for is not,
Being yeah,
yeah, you're not
yeah.
getting you're not getting taken. All your money's not getting taken away. It's just like only this straight, you know,
You just get the full profit from it.
the full profit. Yeah.
Full dip, yeah. Which is
Um,
pretty. I like that. I like that every platform went like that, and you can buy
it's
fractional shares. It's
Yeah,
pretty
it's
cool.
very user friendly, which I like about it is that like people are so I guess adamant and very uh, scared of what and how they approach the in this time kind of topic,
Yeah.
the stock market. But in reality, it's just like really like a gaming app and like kind of like a game app on your phone. Like you just open up an application, you just put in your credentials, and boom, you get like news that are not even like advanced, or, like the numerics,
Yeah.
just simple numbers.
Yeah.
You don't have to be super overwhelmed based on how you know how well you know about the stock market. It's yeah,
Yeah.
that's what I
It's
like
yeah.
about this.
It's good to just get in the know of that. Just get into know different types of investing. But yeah, we're gonna have to move on from this topic because we're almost approaching the hour, and I want to get
Oh
this
yeah,
out by
sure.
an hour at least. So we have about like 10 minutes left or so, maybe 15 minutes. So I wanted to talk about. We mentioned Roth IRA earlier, which is called. It's just a
Mm-hmm.
Roth. I don't know the Roth stand for anything. It's different from a. It's different from a retirement fund. I think it's individual retirement fund. Is that what IRA is?
Roth IRA is
I mean the IRA part.
basic. It's a special retirement account where you pay taxes on money going to your and then like all the
You don't.
forecasted or future withdrawals are tax free. That's
You
what
don't. No, you
basically it
don't pay
is.
money on. You have to put money. Is your money taxed when you put it in?
I'm like this is like the actual definition of what the Roth IRA is. I'm
Oh.
looking at it right.
Oh
Yeah.
yeah, I'm pretty sure. But I'm pretty sure something about tax free. Like, the money you leave in there is tax free. Like, and then after a certain
Oh
amount of
yeah.
time, it's tax free. You can take it out with no penalty, and which is fucking. It's like so great. Like you can invest in like an index fund or a ETF, like those things that have a our mutual fund that have like just a collection of stocks and that like pay dividends, and you can just leave it in your thing, leave it in your Roth IRA to just sit and wait. I think you can even put like cash in there too. Yeah,
Yeah.
yeah, you can put
It's
straight
yeah.
cash. But
It has like this almost the same similar concept of buying a CD or bond, like where you just deposit it and then you just wait for it to exponentially grow.
mm-hmm, yeah, you just have
So
to wait. So yeah, it's kind of like a 401k, but it's not really. It's not with your employer. It's by yourself. Um,
I don't think people should really focus. Okay, there's a lot of
you're cutting out.
I don't think people should focus entirely on the 401k aspect. I think there's a lot of resources where you can invest for your long term.
Yeah.
Yeah. So
Um.
obviously the 401k will come into play when you start working and stuff and whatever the benefits or your bonuses that your employer gives you.
Uh huh.
So
Yeah. 401k, I think just it's just your employer, so it's whatever they have. You know, it could be good, could be bad, but it's good to have a separate, not just rely on 401k because it's not really reliable. I think, in my opinion, especially for the new incoming generation, where automation is taking over and jobs are becoming more useless. But we still go to
yeah, it's
college.
more like AI and stuff. Yeah.
But we still go to college and do this. I don't know why, but it's kind of the status quo, but it's a big status quo. Well, yeah, Roth IRAs usually tend to have about 6 to 7% interest annually, which
Yeah.
is pretty damn good. And thinking that you're holding that for till you're about 55 or something, 56,
Oh yeah, for
is
sure.
that's basic, and you just keep throwing money inside. You basically have you'll have probably little. It depends on what your initial amount is and how much money you keep putting in.
Yeah.
But if you have like the correct amount, I think it's like you can get upwards of over $1 million if you have the correct.
Oh yeah, for sure.
Yeah,
I saw this right now. It's one of the example diagrams for, diagrams. Sorry,
yeah.
diagrams for a Roth IRA. And so, basically, if you invested $75,000 within a 10% annual rate of return
Damn, that's
for the
high.
first 10 years,
It's already seven
for
hundred
the
fifty
first ten,
thousand dollars.
or no, that's not 750, 75,000. Sorry, 750. Why did I say that after bad?
Yeah, 75.
$75,000 on a 10% annual rate of return for the first 10 years, you're getting that amount. And within the next 20 years, you're getting upwards of 228,000. In the next 30 years, you're getting half a million, and then within the next 40 years, you could basically get a million.
Yeah, and that's basically about the time you retire too.
Yeah.
You'll have $1 million to just like, and you could even like reinvest that stuff too.
Yeah, and then you can build it off and make profits.
Yeah, and it's not
You
like you're
profit
gonna
off
it's
from
not like
your.
you're gonna be pulling out $1 million at one time when you turn 56.
Yeah, that's
You
just so
know,
stupid. It's just like really
it's just
stupid.
it's
Yeah.
just that you're able to pull out certain amounts for like, if you I'm pretty sure you wouldn't have a mortgage by then, your house would be paid off. It depends when
Yeah.
you bought it though. If you bought it earlier in your lifetime, I think it's like average is 30-year mortgage, yeah, 30-year
Yeah, 30
mortgage.
year
So by the
30-year
time
mortgage,
you should be done by then.
paying
So
off your
that
house.
basically it's tax free money too. So that's like all
Yeah.
tax free money you can just take out and use in wherever the hell you want.
Yeah.
You could
Which
donate.
is like completely better than the 401k, to
It
be
is
honest.
OP, honestly. It is that
It's like
that's
really OP
OP.
because do you realize like the 401k, you know how much tax you get after you retire from your company?
Probably like 30-40% really.
Yeah, you're only getting a handful of what you earned for the past 40 years you've
Yeah,
been
and it's
working.
so dumb, dude. Like,
Yeah, which is completely stupid because like you expect to have like a high hope for
yeah,
like a big like some like loan sum of money, and then
yeah.
in return you get like fucking like $20,000 in return. I'm like
That's
shit, man.
yeah.
I've been working for 40 years in this company. Like at least give me a break.
That's why not a lot of people are financially intelligent. Not saying they're not
Yeah,
intelligent, just saying that they're not financially intelligent to where they know this stuff. And I'm really
yeah.
glad I keep saying this. I'm really glad I found this kind of stuff now because if
Is
I
there a level of, sorry, what?
because
You
like
found that value?
if I
Yeah.
really had it, I think I'd be like spending. I don't really know what I'd be doing though. Like I remember when we
Oh
did
yeah,
this.
for
I remember
sure.
when we were talking about money. It was at my house, yeah, when we were playing basketball after
Yeah.
lifting when Keith came or your brother came,
Yeah, when my
and
brother came, yeah.
we were just talking about. We started some more reason talking about stocks and marketing or some kind of like investing stuff.
Yeah.
Yeah, you and your brother, and then that's what really sparked it though. Like I didn't really like that's when I started the Discord, the finance club, and
Yeah.
I wasn't really like focused on that. But then like eventually when I started getting into like forex and stuff and started watching videos, like my fucking my interest for that
You're
just like went through the roof. Like I started looking up videos about like Roth IRA, credit scores and all that, and it just clicked like that. It's just interesting to me, and it just makes me feel like not better than all my peers, but like it makes me feel like I stand out from other people because I'm doing this stuff that not a lot of kids my age do,
Oh
which is
yeah.
kind of sad to know because like they should be doing it, but if you tell them, they're like, I don't care about that stuff. I just want to party and live life and shit. Like you have to balance though. Like you have to think long term. Honestly, it's
Yeah,
it's
for sure.
it's really scary to have a mentality of short term gain and not like thinking about the long term. Because I'm thinking about the long term. Like especially like I'm thinking recent. Like my probably most recent like plans and stuff is like after college. Like that's how recent it is. Like is this degree gonna
Yeah.
work for me? What I'm gonna do, how I'm gonna get a job and all that. How do I quit that job after a few years? I want to quit that job probably. You know,
Right.
to
There's a lot
become
of factors.
yeah financially independent and stuff. But there's a lot of factors that people should know, and I'm kind of glad. I'm glad I did know. I'm glad you and your brother brought me to this.
Oh yeah, like it just sparked your interest
It
and
just
stuff.
sparked my
Yeah, no,
interest.
no
Yeah,
problem.
yeah.
Yeah,
Even
because
even
I
like
think
Yeah, even like Carl too is kind of interested, but not that interested. Just but
yeah, I think people should be aware, like not as in now, because like since the economy is changing pretty rapidly, like not a
mhm.
lot of people would be enticed to the fact that they can $1 million within a couple of
you know
stages, right?
within 50 years
It's like
basically or 40
within 50
years.
years based on like this process of getting exponential
Yeah, you're
on
cutting out
your
again.
getting exponential income on your retirement, right?
Mhm.
So
Yeah.
that's
So
why the motto goes: you cry now, but you laugh later and enjoy the thing.
yeah, you enjoy the money you have later and laugh at
Yeah,
the other
and
people
you
who don't
always
have
want
it.
to work. You always want to work. Uh, you don't want to work for the money. You always want
The money
the
to
money to
work
work
for
for
you.
you.
Yeah, and manipulate the money to where it benefit you, not
Yeah, those are two things that come into for me, especially when it
yeah,
comes to like finance.
yeah. So we'll run down what we talked
I
about.
think
Just money management. If you listening through, money management, save your money, live a little more frugal. Live below your means. Credit score, those 5 steps. Just open a
stay
credit card.
minimalistic.
Yeah, just stay
Yeah,
minimalistic. Do those 5 steps that I told you. Go open a credit card. If you need your parents' help or go ask them. But I'd say like how Nico said, Discover card. I'm probably gonna open one soon because
yeah.
I'm
Discover
sick and tired
card.
of waiting for my parents. Like, oh, you should just wait till you come back. No, I'm gonna do it now. That and then
If you're 18, come on, Jan. You're 18. You're an
yeah,
adult.
especially if you're 18,
No
just do
one,
this stuff now.
no one's gonna talk over
You
you. I mean,
have you don't
obviously,
have much to lose.
yeah, yeah. You really don't have much to.
Yeah,
So,
even your
and then
20s too,
with
you don't
that,
have much to lose.
right, it's like what within like around the block, like
Yeah,
getting to our in our age for being a 20-year-old,
it's fast, man. Like once you reach
and
adulthood, it's fast. But
yeah,
let me get through this outro because
super
we're
quick.
reaching. I don't want to go too far. So yeah, the second one
No,
was
it's
just your
fine.
credit score.
Yeah.
Just
So
yeah.
there's applications for the oh yeah, getting inside of the stock market. It's pretty cool.
Oh yeah, that was the
There's
third.
apps
That's the
for
third step. Yeah, you're
phone.
investing.
Yes, and just like yeah, investing like strategically. There's apps for
Investing
phone.
stocks, investing forex.
M1, Webull, fucking Acorn. No, not really Acorn, but Robinhood, Charles Schwab,
Yeah.
Roth IRAs. What Noah said. There's companies like Vanguard. What else companies are there?
I just say use Vanguard maybe. I think Vanguard is a
Oh yeah, I think
better one. I
Vanguard's a
think
pretty.
TD
It's a pretty
Ameritrade
good
has
name.
one, but I think just go with Vanguard. I think that's like the best rated
Yeah,
one where you can just put money into it and just
and
save.
yeah, yeah
Honestly,
for
I
sure. And
think
then
yeah, those are like some good. Oh, what were you gonna say? One more thing.
oh yeah, and just simple saving in general.
Yeah, just live frugal. Live more frugal than you are now.
Yeah,
If you don't know what frugal means, look it up. But yeah, I think that's the main points that we're trying to make. Just become more financially intelligent. Just learn how money works. How to make money work for you. How to manipulate so it'll come into your pockets and not just leave your pockets after your paycheck. And then eventually
yeah.
you'll be set up for the future. It's a long process. You're not gonna get rich quick. It's just preparing you for your
There's gonna be
future.
some ups and downs.
There's gonna be up and
Uh,
downs and stuff, but it's just preparing you for your future. Like
yeah.
you wanna think to the future, not just now. Just partying and stuff and spending your money on cars and
You might
shit.
even want to. You might want to think about like, even for your wife or even for your future family too.
Yeah. You want to be thinking for yeah, you want to be thinking for like your kids too. Like if they want to go to college, you want to start making a college fund and like a high interest savings or whatever.
Yeah.
Um um I think that's pretty much it. Yeah, just what I want you guys to take away from here is just if you're young and listening to this, start doing this now. That's not all the
I
stuff you
know it
can
might kind
do.
of seem boring, man. Like to be like, okay, not gonna lie, like whatever we said right now was a tad bit boring. There's no umps to it.
Yeah, there's
But
no umps to it, but it's just so useful information. I encourage
it's
you guys.
super useful.
I please beg you guys to do this
Highly
now.
encourage you guys.
Yes, please
Like
do
my
this
fucking
now.
dick throbbing right now. That's how
Okay,
fucking
there goes the
encouraging I am.
monetization.
Okay, all right. Sorry. Just
Um,
like how enticing it is for people um, to acquire such good amount of money. It's like
yeah,
fucking awesome.
just start now because then you won't have to worry later. You won't have to worry about 401ks. You won't have to worry about
Yeah, those shit
any
is
retirement
like
money. Like you wouldn't have
yeah.
you'd be able to live freely and happily, in your retirement, and that's what you should be looking towards your retirement and stuff, and like progressively making more money so that you can still make money while you're retired. That's how you do like
Yeah.
dividend and passive income and stuff like that, and
And
do
you don't
other
even know it.
yeah, and you can do other investments like real estate is a good one, but that's if you have
You're
larger capital.
sleeping and you're getting passive
It is amazing. Yeah, that's the part. That's the point I
yeah.
want to get to in my life, is where I can sleep.
Overnight money.
Is where I can sleep. Is where I can sleep and make a full time income. That's the point I
Right?
want to get into my life. That's where I want to get in my
You go to
life.
bed, wake up the next day.
You already made
Boom.
$1,000.
I made $1,000.
Yeah, that's the goal for me, man. But
That's
yeah,
the dream.
just to reiterate,
But yeah,
just what I want you to take away
yeah,
from this, just to do what we told you. Just look at.
yeah, just do
Yeah,
just look like
okay. Yeah, just look into
yeah, just look into the
look into retirement savings, look into savings in general, like high interest savings, look into credit cards, investing, all that stuff, so that
My Savings Direct.
my savings direct is a good high
So
interest savings, like
fucking I
2%, yeah.
fucking put all my money in there, man. I'm getting
Yeah.
fucking banked, bro.
It pays. It's basically like a dividend thing, honestly. It's
Yeah,
basically
it's
a
like
dividends
yeah.
bank account, but yeah,
Yeah.
already an hour and 5 minutes.
I think I did the outro for the previous episode.
Yeah,
so
so
I
I'm
was
gonna do the
wondering,
outro. Fuck you. I'm gonna do the outro.
Okay. All right.
You took my outro for doing the steps. That's why. Fuck you. But
Fuck you, guy.
yeah, so yeah, just do those stuff and just fucking do it, please. Just I beg you, just do it, okay? If you want more information, just go on YouTube. Maybe you could drop a comment if you want to. Ask us more stuff. Maybe we'll do stuff like this if you guys like it. But yeah, well, I guess that'll wrap up the podcast. This has been the 5 Tree
Stay
Podcast.
tuned. Kinji X will be expanding more into YouTube.
Yeah, Kinji X, dude. I'm not sure if I'll keep that name, but I kind of like the ring to it. But
Hey, dude, we don't know what's up for your stores.
Yeah, man, Kinji X. Hopefully we'll do this. Maybe we can make like actual videos of we're talking about this finance stuff. I think it would be pretty cool. Maybe like vlogs and stuff will come up maybe soon if I have time for it. But yeah,
Yeah.
thank you for listening to 5 Tree Podcast. If you like this kind of investing stuff, drop a like and subscribe.
This is your co-host Nico.
Go share it. I'm not done yet. Go share it with other people.
Oh, okay, fine.
Go rewatch our other podcasts if you want. Yeah, I think that's it.
We made what this thing? I think we made 5 podcasts now.
Yes,
So,
episode 5.
Good job.
Yeah,
Yeah. So
we're pretty
is gonna
good.
be
We're pretty
episode
good.
6, I
I think it's been an episode almost every week. Honestly,
yeah.
this is pretty good.
All right, guys.
All
See you
right.
guys next week. Stay
Yeah.
tuned.
Thank you for listening to the 5 Tree Podcast. Do all that shit I said. Please do it now. For the love of God, do it. But yeah, we'll see you next week. Bye.
Shoots.